Bitcoin breakout or breakdown? Hello and welcome to Landy's Crypto Corner. Today is February 21st, 2023, and that's actually what we're going to take a look at today utilizing the swing chart. And if you're not familiar with the swing chart, it's simply the swing highs and swing lows of price action. We're going to be taking a look here at Bitcoin on the weekly and the daily swing chart. And then we're going to kind of tie that back into some lower term time frame analysis to try to determine which way Bitcoin is likely to break out or break down from and in which areas. So in this case, I do have the weekly swing chart up on the index here. So what we're going to do is I like to turn price action off to kind of get a better visualization of the swing chart here. And again, it's just highs and lows and confirmed highs and lows in this case. And when looking at the swing chart, it's pretty easy to see which areas need to break for price to get continuation to the upside here, and which areas need to break for a breakdown or get a retracement in this case of this uptrending structure. So we can reference what I've already put on the chart for the thumbnail here. And you can see that the green overhead line here on the weekly is the weekly resistance right now. So if we can break above our local highs here with a weekly closure, or even I would say a daily closure, should push price up at least intra-week. And in this case, you can also see there's a low over here from the short-term distribution range above the current trading range. And you could also see that there is just below us there at that swing low. That's going to be the breakdown point. We do have two specific areas that this is relevant for. And I just realized that I should have two of these because there is, this is support down here. And if we look here, we've got a support over here. And of course, we bounced off of this high area as support just recently on the weekly time frame. So pretty clear areas of continuation to the upside and a pretty clear area of a breakdown below support here at 21,370. So when taking a look at this with the candles on, we can see that the swing chart is showing that, we've traded up over this particular swing high up here, but we have yet to actually break it on a close. So in order to get continuation from the weekly standpoint, we need to see a close above that 25,365. In this case, I'm looking at the wick low over here, but you can also take the 25,207 or the current wick highs. It's the most recent price action. It's going to be more relevant on the weekly here at 25,262. So basically, anywhere above 25,300 on a weekly close, I am looking for things to test up further, at least intra-week, so from the daily time frame. And that could then lead to the weekly. And on the other side of that, we can see that anything that trades below 21.4 is going to be breaking the swing low, which is also a swing high. And that is going to put us down near another area of support. And that area is going to be generally around that 18,152 to around, we've got 17,585, so 17,6. And you can see that the more relevant area is going to be that $18,000. So right here, we can see that there is at least 3 swing lows in the vicinity, 2 nearly directly on, and we do have a swing high in that area. So 18,000 to 18,500 is kind of the destination for, an overall downside move. We could see a pause at around that 20,400. That would be the preferable area to see Bitcoin hold, is above $20,000. but I do think that the weekly momentum would start to take over here. So when looking at this, well, taking momentum into account, we can use a few different indicators for that. And the first set I'm going to turn on here are the Bollinger Bands, a first standard deviation Bollinger Band, a second standard, and a third standard deviation. And in this case, you can see that the swing highs, the past two weekly swing highs have gone above the second standard deviation. We had one closure above the second standard deviation. We were quickly pulled back into the first standard deviation, got a very nice bounce off of that, and failed to close inside of that second standard deviation, third standard deviation area. So basically above the second standard deviation, I am looking for continuation. In this case, it's $25,300. And how that, of course, lines up with the actual swing chart here is pretty clear. So it's right on the second standard deviation, and it is a pretty big area of resistance. So if it is broken, I do think we're very quickly going to find ourselves up around this area here, which would be $30,000. That is the ultimate destination, I think, for Bitcoin should things head to the upside. Now, Bitcoin's getting kind of tired up against this resistance, so we do need to take a look at momentum. And in this case, we can see that Stochh is beginning to turn, but it is not a confirmed cross to the downside here. So this is a Stochh RSI. So this is reading our RSI here, and it's showing that we're getting a little tired. You can see the RSI is turning over, but it's still very early in the week, so we have to wait it out and see where this weekly closes. But in this case, we can also see multiple drives of bearish divergence would be forming here. This would be the second in this trend, making three total drives off of the previous high here, and that previous high is still a high that needs to be closed above. Now, in this case, we're seeing that on spot price action, we did not close above this high. So we'll take this and we'll turn this line yellow real quick here. And you can see here, excuse me, as I stumble over my words, you can see here that 24,316 was the closure needed, and we closed at 24,281. So if Bitcoin does put in a high here on the weekly, that would, of course, to put in a high, it at least needs to close below $23,000. So $22,950 to $23,000. If Bitcoin were to close the weekly down there, this would start to paint a high, and that would then initiate the next set of criteria, which is that bearish divergence playing out on the weekly. And I like to target, obviously targeting different areas on RSI. When doing so, you need to make sure that they match up with support and resistance, or the swing highs and swing lows on your chart. So in this case, what's the closest to it? We see that we have 21,400 is the mid-range, or the 50 read on RSI. How does that line up with our swing chart here? Well, that's right around the current swing lows. So that would be the initial target off of a drive of bearish divergence. Of course, jumping down into the daily on a swing chart is going to really kind of paint the picture of what's going to be happening in price action between now and then. And you can see that trading back below the prior swing high of the range, not the current, but the prior swing high of the range, not necessarily a great thing. And we do see that we've been trying to push up into that second standard deviation here and been failing to do so. And if there is any kind of a closure here or lower, we are targeting initially 23,225 now, 224, 225 here on the spot price chart. And that is going to be kind of the natural destination. We do have support coming in around 23,730. But basically, momentum is going to start taking over here. You can see Stoke is it does have an initial cross down. This is the Stoke RSI. We are going to look at a regular Stoke in just a moment. But if we do close anywhere lower than the wick lows here, that being this area here, that's going to be 23,841. So basically, intraday, it would need to come down and bounce around that 23,700 and regain the wick lows to have another chance to run at the highs right now, if price continues to the downside. But if this area, this first standard deviation is lost, the 20 simple here on the Bollinger Bands is going to be the destination for price action. And right now, that's around 23,225. When looking at the weekly, we saw that the destination for a high on bearish divergence, in this case a continuation drive, will be sending it back to around the lows on the weekly there of 21,300, 21,400. And in this case, if we have multiple drives of bearish divergence that do populate, we already have one that's populated from this particular range high on this pump back up to the highs here. There is a big bearish divergence here. So losing the signal line is anything below $24,000. And anything below $24,000, we're going to go and test that that area at 23, 23K is kind of the destination that I'm looking at. But 23,000 to 23,200 area where the 20 simple is. And 23.5 is going to be the next short-term area down there, and I'll show you that in just a moment. Cross below the scale midline here, that's going to be your $23,000, with targets down to the bearish control zone here at around 20,556. Now that's pretty important, as we'll see in just a moment, but 20,000 675 is the actual close open low of the range below us here. So it'd be below even these lows here if we were going to go test the downside even further than our current range lows. Right now I am looking at this as more likely to come down and test the current range lows if we do start seeing 23,200 area to $23,000 lost. If that area can hold up, then sure, has a chance to paint a higher low in this area and try to march up higher. But as it stands right now, you can see that for momentum purposes, the Bollinger Bands have slowed in their aggressive upside slope, just slightly upside sloped here on the 20 simple. We are, of course, in the stronger half. So, for right now, things are looking like, to be quite honest, my personal opinion is it does look like it wants to put in a high here and come back down and test the 20 simple. That's where the rubber hits the road. $23,000 basically is going to be the line in the sand. Below there, things are going to head down and test these lows. And then, of course, the next lows down on our chart here. Of course, pit stops in between around that 21.2 to 21.4 area over here is going to be the next big areas to the downside for support. And you can see that is also where the prior swing high and swing low intersect. So that should be decent support, but we would see how long it could maintain that support on a weekly, because that is going to be the important part. When flipping over to our EMA chart here, and for those that have not seen this before, I've got a 9 exponential, a 21, 34. So yeah, an orange 9, red 21, yellow 34. I have two sets of 50 EMAs. I have a 55 and a 50. So the lime green one here is a 55 EMA, and the blue line is a 50 simple. The white line here is the 200 EMA. Below there is the 100 EMA. And then finally down here, the purple line here is going to be the 200 simple. Now, I use these in a few different ways. There's a reason why I use the simple and the exponential on the same chart for some of those longer EMAs, like the 55 EMA and the 50 simple, the 200 EMA and the 200 simple. This particular EMA stack is fairly common. You can see that you're going to see different variations of EMAs all over the place, but this is the one that I found to be the most useful. Also, it's fairly common, so you'll see these particular EMA lengths are often programmed into trading bots. So, and for algorithmic trading, you're going to see Fibonacci and trading bots and all that kind of stuff. We'll use those EMAs, Fibonacci's. They'll use Bollinger Band standard deviations and all that different stuff. So the really, really slick ones are usually run by those with a lot of money, institutional traders in many cases. So, and they're all going to basically be buying and selling based off of those support and resistance areas along with momentum. And in this case, we can see that the daily is just bouncing off of the 9 EMA. And the next destination, if we do see a closure below the 9 EMA, is the 21 there, the red 21 coming right in at the 23,373 area. So basically 23,400. Below there, we see that we're getting below the 21. We're getting into some of the prior range lows there at the 34. So 22,710. These are all probably going to provide shorter term time frame bounces if Bitcoin does put in a high here. And that being a confirmed high, again, I'm going to say pretty simply, below $24,000 on the daily close, we're most certainly going to at least test down to this 21, even if it's intraday and gets a nice bounce. So that would be down to around, the lower $23,000 area. As long as Bitcoin can stay above $24,000, it preserves its shot for an upside move, at least in the immediate short term. Now, below the 34, you can see at 22,800, that would be losing this range over here. Whereas the next area, well, coming into the highs down here, the swing high over here, and the swing low over here, we have the 55 EMA, the 50 MA, and the 200 EMA. So a lot of support, I do believe, would be coming in that area. We can also see that there's prior swing highs here on the daily as well on the way down. And then below there, the next major area I've got marked is where we had the intersection between the swing high over here and these swing lows. So to kind of illustrate that point with this chart over here, you know what? I don't think I actually have the EMAs on that chart. We can turn the swing indicator on here, and we can take a look at this without the drawings, and you can see where things are lining up for EMAs and then the support and resistance as well. So we can turn off the indicators. Actually, you know what? We'll do turn these back on, and you can see where the zones kind of come in, and we'll turn off the EMAs here instead. So fairly clean look at price action. Really, to be quite honest, this is a fairly easy to understand move. It's either going to break out above the 25,300 or it's going to break down below. In this case, on the weekly, we're looking at breaks below the 21,400 area, which of course the 21,400 area on the daily is that intersection between these swing highs and lows on the daily. So that's pretty much where I'm looking at things, or how I'm looking at things right now on the weekly down to the daily. We're looking at some of the momentum pivots. That's what we'll get into over here, some momentum. This is the Stoke RSI, which is already beginning to turn. and then we've got a regular Stoch. So the momentum pivot for the daily right now is going to be 24,250. So lose that. I believe it was the same yesterday as well. Lose that area, and we will start to see a momentum shift on the daily, of course. But anything below the $24,000 would do that, and then satisfy the criteria for the other things I talked about there. Putting in the high, and then seeing the first targets for that bearish divergence. The 12-hour is already turned here, so 24,818 on the 12-hour momentum chart. The 8-hour is going to be basically above $25,000 to turn that one back to the upside here, so it's all pressure down in these lower term time frames. The 6-hour chart, again, around 24,950 would turn that up. That is pressure down. The 4-hour, I believe, is also just now exiting the strong half, or the bullish half of the momentum chart here at $25,050. So getting lower the time frame, we seem to be getting a little bit further away, with the exception of the 3-hour at 24,623 in this case. The 2-hour still headed down, but 24,312 to turn that back up. And then, of course, we've got the hourly probably flip-flopping around here, and it is currently pointed up on any closures above 23,950. So we are coming into the close of this hourly, so that's going to be kind of right on price action here. Now, in using the swing chart on the daily, you can see that it very clearly defines for you the areas of breakout and breakdown. Right now, holding on to this high here, and we've seen wicks come into price here. So in this case, let me actually fix this real quick here so that it's not snapped to the right. And we can go ahead and see that we've come down and tested into these other highs here. And basically, we start losing these highs. Where's the next area? And there's quite a few wick highs, so there's a lot of traffic in this area. And if we do start to lose this area, we will see Bitcoin begin to execute that move towards this current low side structure of this high in particular, and we would start to see things turn. And there's one last thing that I did want to check here to see if we got any updates on, and that would be over here, I believe. Maybe not. So we'll just have to redo this. This is going to be looking at the fixed ranges for the area that we're in. So the current highs up here, and then the previous range that we just basically closed above on the daily, but are struggling to push on any further from. And here we can see that if we look at this break up candle, we can see where the highs point of control is here on the daily, and that's coming in at 24,630 or so, 24,625 or 24,600 is probably easiest. We have pushed down to the value area low, which is at 24,100 area, and then up to the value area high at 25,000. So again, if we lose the range, which this is a fixed range, so it's taking the breakout candle into account, we can see that we basically lose that 24,100 area, $24,000. We're going to come down and probably test in and around the 23,500 area, which is the candle body open. I'm sorry, the close open over here before pushing up to this top range, where you can see a lot of swing fails right here. The other thing to take into account is we lose that 24,100 area, or Bitcoin does, not we. In this case, we would confirm that swing fail area, which is another confluence to add to your bag of confluences, I guess. which would be targeting the daily 20 simple at around that 23,200 to 23,225 area. And then quite honestly, anything below there, you can see we're stepping it down to 22,150 and then targeting any, the actual support here. And then get below that support and we start trending to the downside. That's anything below $21,000. And we'll start to see this become a fairly, not necessarily an impulsive structure, but a fairly powerful move to the downside, I think. So that's where I'm going to leave it today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And with all of that being said, Landy out.